guys, it's your local realtor, Chloe Shook here, and this is my November market update video for 2022. So if you want to know exactly what's going on with the real estate market and the economy from not only a national perspective, but also from a local perspective, stay tuned. Now, of course, we can't talk about the real estate market without talking about interest rates. Currently, the federal government's goal of decreasing inflation does seem to be working. Experts are saying that we saw a peak in inflation, and therefore that has caused a little bit of relief in the mortgage industry. So actually, rates are down for a 30-year fixed loan almost a full percent, which does make a big difference in terms of your borrowing costs. So that is good news. And typically with little fluctuations in rates, we are seeing a little bit more market activity, which is to be expected. Now, the unfortunate thing is that it's really hard to decrease inflation without increasing the unemployment rate. Recently, several large companies are announcing layoffs, especially large tech companies such as Amazon, Lyft, Facebook, Twitter, and several others. A lot of what we're seeing is a shift in mentality from I don't want to work a 9 to 5 to I'm grateful to have a good job. In fact, according to a recent report from the National Association of Realtors, payroll jobs are on the rise, and we are pretty much returning to pre-COVID numbers. Now, in terms of national housing inventory, of course, we have seen an increase in the inventory since rates began to raise early this year. But what's interesting is that we're actually seeing a decrease for the past 2 weeks in a row. Now, remember that inventory can be affected by the number of listings or the number of buyers that are active in the market. And I do not think that this recent decrease in inventory is due to an increase in buyers, but rather I think what I'm seeing a lot in my market is sellers are pulling their homes off the market because they are not getting the offers that they had anticipated. So decrease in inventory due to fewer listings. And I do think that this pattern will continue through the rest of 2022, and we won't see an increase in inventory until early 2023 after the holidays. So naturally, in response to rates increasing, what we did begin to see is a lot of price reductions in the market. It does appear that those price reductions have peaked, so that, along with the decrease in inventory, indicates that there's not a huge wave of supply coming. There's not a whole bunch of distressed properties that are ready to hit the market like what happened in previous cycles. I also wanted to share an interesting statistic from the National Association of Realtors. 25% of homeowners have a 30-year fixed mortgage at a below 3% interest rate. So that is good news. And 40% of homeowners actually own their homes free and clear. So this further tells me that I don't see a huge wave of foreclosures, bank-owned properties that are going to hit the market. Now, regarding interest rates, I also wanted to take a look at this chart that I came across from Pensford Financial. They actually did a study of the past several market cycles and how long it usually takes before the Fed starts to lower rates again. Now, they found that on average, from the time of the first rate hike to the time of the first decrease in rates was about 2.2 years, with another average about 8-month time where rates are staying pretty flat. So now this is a good argument for some of those adjustable rate mortgages, of course, with caution and understanding how those work. Logic tells us that if the average period of time is about 2.2 years, then certainly if you did a 5-1 ARM, rates would be lower and you would be able to refinance if you're looking at this from a pattern and logical standpoint. Overall, it does appear that the Fed's mission to decrease inflation by increasing interest rates is working. I just hope that they have enough patience to realize that it's working and they don't take it too far. Now, in terms of our local market here in Columbus, we are seeing a similar pattern regarding inventory as we are nationally. We had a decrease in inventory over the past 2 weeks in a row. And again, not due to an increase in demand, but simply a decrease in the number of listings, some pulling their home off the market due to not being able to get the offers that they had anticipated. And if we look at the chart for inventory, it does appear that the 7-day average is indicating that this is our peak in inventory. If we look at this chart here showing our number of new listings as the gold line there, you can see that our number of new listings has been declining pretty consistently since rates began to rise earlier this year. So the fact that inventory is just now kind of starting to peak indicates that our market is starting to find a new normal. Now, in terms of our year-over-year data, we still see about a 10% increase in our median home price from this time last year, as well as an increase in price per square foot compared to this time last year. Now, rather than looking at the data from a year-over-year perspective, one of the indicators that I like to look at to see kind of where the market is heading is the price of new listings, because this kind of predicts where the sold price will be in the coming months after that. Usually the price of new listings is about 3 or 4 months ahead. So what we are seeing right now is, you can see that gold line, the black line are kind of coming together. So that shows us that the price of new listings are pretty much on par with the price of sold listings. So, again, indicates that we have found our new rhythm in response to the increase in interest rates. So if we get good news again in December about the inflation report and rates, either don't rise very much or don't rise at all, then I would anticipate that our market will be pretty healthy. Now, if we get bad news on that, then, I would look for prices to start to converge into what they were last year, which would result in about a flat year-over-year change for our median home price. Another indicating factor of the direction that the market's heading in would be the percentage of properties that have a price drop. So we can see, looking at our chart here, the 7-day average kind of indicates that we are finding a max point in that percentage of properties with a price decrease. So that's more good news of us finding a new spot that we're going to be balanced at. Now, I did want to talk about an interesting report that Zillow actually released recently. It was a study of the 100 largest metro areas and the ones that are starting to see a shift already. So obviously, number one on that list would be Boise, Idaho. This is where all of the people that lived in California started to move to once they realized they didn't have to come into the office anymore. Now, the reason for their extreme growth in Boise, Idaho was pandemic related. So a lot of the metro areas on this list are, fall into that same category of, hey, they grew a lot over the past couple of years because people didn't have to go into work anymore. Now, the reason for Columbus's growth is much different. We are growing because we have more jobs here. Our cost of living is relatively affordable. And with the new attitude of the economy, people are grateful that they have a good job. We've got Intel building 2 chip factories and Honda building a ginormous battery plant. That is all good news for steady growth moving forward in Columbus. Surprisingly enough, Austin, Texas is actually number 3 on that list, seeing a -3% change in their home values over the past 6-month period. Now, Columbus, on the other hand, has actually seen an increase over that same time period. So I would feel fairly confident that our growth is here to stay, or at least we are not heading in the negative direction. So that's what's going on in the real estate market here in Columbus. If you are looking to buy or sell in the area, or just have some questions about the process, feel free to reach out to me. You can call, text, email, or reach out to me on social media. And of course, I can run this data by specific zip code. If that's something you are interested in, feel free to reach out to me. Thanks so much for watching this video, and I hope to see you in the next one.